because of athletics. I did an RSVP, so I mean, I wasn't out planning. Yeah, so it was such a put together. Like, he was exhausted. Yeah, afterwards, for sure.
I stopped down.
Just like the
I was wondering, I was like,
I should have said walk on stage.
Great system.
you know what?
I had mine
You ready now? I'll wait. I'll wait on you.
I mean, it does a lot of times, so it's already recorded.
Oh, okay.
So they'll have it.
Right, isn't it?
We're good? Alright. Welcome everyone. 2020 benefits meeting. Thanks for coming. We're here to kick it off. Obviously introduce Chris and Angie, who met before from Benefit Administrators. They're a third-party administrator that we utilize to broker and administrate our very critical piece of our benefits, our medical benefit offerings. I'm glad you're all here. There's a lot to go on. There are changes in 20s plans to pay attention to. 19 was not the greatest health year for our group. It was a big group, which is fine. I mean, it's not fine, but you know, that's what it's here for, is for everybody, for their medical reasons to, you know, kind of cover everything. With the world of healthcare the way it is, obviously it goes off of, you know, we're self-insured, so it goes off our plan, the pricing and everything, and with the continuous increases over the last few years, we unfortunately, you guys are going to see a little bit, or about a 25% cost increase for you guys, which is a lot. We take that seriously, but we haven't raised prices and or deductibles or deductions in about 3 years, so, and our insurance has gone up about 150% since then. So big numbers. This is very important. We obviously, all of us work hard. The group can help impact that. We had a lot of money go to ER visits that shouldn't have been ER visits. We had a lot of money go to drug expenses that you probably could have got generics. Chris and Angie are going to go through this. You know, a lot of out of network stuff that we need to educate ourselves on better. So we got to be smarter. That's the world of healthcare these days. It's real money. The pricing is going through the roof, which means we need to administrate it better, and that takes everybody in this room to make smart decisions about their health insurance and kind of where they get covered or not covered, or where they go, where they're seen, and your health. If you have any questions after any of this, you can always find me. Sean obviously runs the plan, but you know, with the changes that are going through, you know, I'm here for you. But so please listen. Again, think about how you and your families can, you know, better use this plan, use the services that are there to, you know, improve the health of our Dawson family. So with that, kick off to Chris. There we go.
Thanks, Jeff. How's everyone doing this afternoon?
Good.
That's good. Like Jeff said, my name's Chris Pagnato. I'm with Benefit Administrators. Angie McGuire's here from our office as well. We're the independent insurance agency that's been handling your benefits for a number of years, and I always start off the meeting this way to let you guys know we're not affiliated with the United Healthcare, Medical Mutual, Aetna, or Anthem. We're working with Dawson to come up with the best plan possible. Like Jeff said, the cost did increase quite a bit this year. That's a negative. I do think the positive here, when we go through this, you will see we're still working with UMR, which is United Healthcare. United Healthcare's network of doctors, hospitals, so none of that's changing. Your benefits aren't changing from the medical side either. So the benefit plans are going to stay exactly the same. We are going to be moving the life insurance and dental and vision insurance to Lincoln Financial here effective January 1. However, the benefits are staying exactly the same. And then I think a neat new system that we talked about on Friday, and you guys all probably saw emails hitting your inbox saying, what is this? You're going to enroll for your benefit plan this upcoming year through this online website here, which we're going to talk about as well. So I'm going to start off in this packet right here. So if everyone can go to this packet, we'll go through it as quick as possible. If you have questions, concerns, ask me. I want this meeting to be pretty informal. I want everyone to have a good idea on what's going on with the benefits. I'm going to start in page 2. Page 2 is just our general info or our contact information here. So you see the medical website and phone number. You see dental, vision, basic life, the voluntary life, the short-term disability. You're going to have the flexible spending account. We do have where it says online enrollment portal. That's going to be the website where you're going to go online and sign up for your benefits for this upcoming year. And then my agency's phone number, email. Feel free to call Angie or I during this process if you have questions or concerns. Next, on page 3, there is a frequently asked questions section. I'm not going to go through the majority of that, but what I am going to point out again is Dawson has the working spouse rule. So the working spouse rule down at the bottom basically states if your spouse has coverage through his or her employer, that spouse has to take coverage on that employer's plan. So let's go through that again. If your spouse has coverage available through his or her work, the spouse has to take coverage on that plan. That's been the same process we've had here for the last couple of years, still going with that rule. Let's now go to page 4. Page 4 is where we're going to spend the majority of our time today. Page 4 lists our 3 benefit plans. So like we stated at the beginning of this meeting, the plans are staying exactly the same. The only difference is going to be the cost. I'm going to run through Plan 1 right now. And I'm going to start with my primary care office visit. So primary care office visit, $10 office visit copay. So if I get sick, strep throat, the flu, whatever the case may be, I go in and see my primary care doctor. I'm going to pay him or her the $10 office visit copay. If I need to see a specialist, remember on this plan we have specialist copays, and you can either pay $40 for what we call a premium care specialist, or you could pay $80 for what they call a standard specialist. So what's a specialist? Think of the specialists as those doctors that end in ologists, cardiologists, radiologists. Those are going to be our specialists. Orthopedics also are going to fall in a specialist as well. You go out on UMR's website and you look up your network of doctors and hospitals. If you go out on that website and you see the doctor with 2 blue hearts, so 2 blue hearts is going to be the key, that's going to be that premium specialist or the cheaper specialist. If you see a doctor with 1 blue heart or no blue hearts, they're going to be the more expensive doctor. So again, you can see any specialist within United Healthcare's network, there's just going to be a different cost depending on the type of specialist or depending how they're rated within United Healthcare's network. Does that make sense to everyone? You've been doing this for the last few years as well. Let's jump up to our deductible, our co-insurance, and our out-of-pocket maximum. What does deductible, co-insurance, and out-of-pocket maximum apply to? Think of it for our major claims, MRIs, CAT scans, x-rays, inpatient, outpatient procedures. So let's say I ended up in Riverside. And had a surgery that was $11,250. If you look down, kind of halfway down the page under the specialist copay, you do have a $250 copay for each time you walk into an inpatient facility. So remember, my claim was $11,250. I pay that $250 copay. We have $11,000 left over. My deductible is $1,000. So I also go ahead and pay that deductible to that $11,000 now. That leaves us with $10,000. Once we've paid our deductible, we come down to our co-insurance line. Co-insurance is the percentage the insurance carrier will pay after I've met my deductible. So the insurance carrier is going to pay 80% of that $10,000 claim or $8,000, I'm responsible for the remaining 20% or $2,000 in that scenario. Does that make sense to everyone? Questions or concerns on that? All right. You will notice your out-of-pocket maximum $6,700. That's the most you can pay in a given year. So if you had $150,000 in medical claims, in theory you pay 20% of that. However, once you pay $6,700, you are done paying for the year. United Healthcare, UMR, they're paying everything at 100% at that point. So you're not paying any office visit copays, you're not paying any drug copays, no deductible. Once you hit $6,700, you're done for the year. So we talked about our inpatient services copay. We have outpatient services copay is $250 as well, then deductible and coinsurance. Our emergency room, $250 copay, then deductible and coinsurance. Our urgent care is $50. And then we have our drug card. $10 for tier 1 medications, $50 for tier 2, $100 for tier 3, $250 for tier 4. Jeff mentioned at the beginning about saving money on the plan. Obviously, you get a tier 1 drug, it's $10, it's cheaper for you, it's cheaper for the plan. The other area you can save money on, mail order. If any of you guys take a pill every day for whatever reason, sign up for the mail order program. Drugs are delivered to your home. It's a 90-day supply. So to do mail order, it's cheaper for you. It's also cheaper for the plan on the payout. So $25 for tier 1 medications, $125 tier 2, $250 tier 3, $625 for tier 4. So questions or concerns on that? Everyone okay?
Pardon me.
All right. So if we go down below then, remember, we've been doing this the last few years, we have a rate if you get a physical, we have a rate if you don't get a physical, we have a physical tobacco user rate, and we have a physical non-tobacco user rate. So we are going to do the same process we've done the last few years. You guys in here, you're going to have through the month, but let me take a step back. Everyone starting January 1 is going to be reset to this physical non-tobacco user rate. So everyone's going to have the rate in green regardless of which plan you pick. So, you know, if you pick plan 1, you're going to have the green rate there. Pick plan 2, you'll have their green rate, and so forth. You're going to have 4 months. So you're going to have January through April to go in and get a physical again with your doctor. So you're going to have January through April to get a physical done. You're going to turn in that physical form to Sean. You're also going to turn in the tobacco statement to Sean as well. At the end of April, depending on what you do or don't do, you are going to have these new rates here. So let's say on plan 1, I'm a single employee, I get my physical done, and I'm a non-tobacco user. My rate's going to be $65.74 a pay moving forward. Let's say I get my physical done, but I'm a smoker. I'm going to have the $85.74. And then if I just say I'm not getting my physical done, my rate's going to be $105.75 per pay. Is that making sense to everyone? So same process we've had the last few years. Questions on plan 1? All right. Let's jump over to plan 3. I'm going to jump over to plan 3 right now. And I'm going to start with my office visit copay. So you're going to see on plan 3, I have the exact same office visit copay as I do on plan 1. My specialist copay on plan 3 is going to increase a little bit. So if I see a specialist and it's the premium care specialist, it's going to be $50 instead of $40. If I see the standard specialist, it's going to be $100. So again, a little bit of an increase in copays there. You will also notice, though, if you look, our inpatient services are exactly the same as plan 1. Outpatient services, exactly the same. Emergency rooms, the same. Urgent care's the same. And exact same drug card. So our office visit and our drugs are exactly the same on plan 1 and plan 3. The difference between plan 1 and plan 3 is go up to your deductible. Your deductible is going to be $2,500 on Plan 3 instead of $1,000. So if you have that large claim on Plan 3, you're paying your first $2,500 of the claim instead of the first $1,000 of the claim. Is that making sense? But if you look at both plans, you will have your exact same out-of-pocket maximum of $6,700. So again, on Plan 3, if you had a $150,000 medical claim, you're going to pay $6,700. The plan's paying the rest of that. So questions, Plan 1, Plan 3. All right, let's move to Plan 2. Plan 2 is the health savings account plan. Anyone in here on the HSA? So a couple of you, Angie and I both are on an HSA plan ourselves. So HSA plan, let's run through it. I do think they're very good plans for everyone. You will notice with the HSA plans, as we talk about every single year, if you look at your primary care office visit, it says after deductible $30. You look at your specialist, it says after deductible $60. Emergency room, you have a copay after your deductible. Urgent care, copay after your deductible, and you have a drug card after your deductible. So you look, if you're on the plan as a single person, your deductible is $2,000. If you're on the plan as employee spouse, employee child, or family, it's $4,000. So on this plan, let's just use the example as a single person on the plan. If I'm on the plan as a single person, I am paying the first $2,000 of my medical and drug charges on this plan. I do not have copays. So for example, I get the flu tonight. I go into my doctor tomorrow. I'm going to show him or her my UMR ID card. I get whatever test and procedure done and taken care of. The doctor's going to send the claim up to UMR, and this is important. I'm going to get the insurance carrier's discount on everything. So if my doctor billed $150 for my office visit, the insurance carrier will reprocess the claim, and they might come back and tell the doctor they can only charge me $75. I get a bill for $75, I pay it, it goes towards my deductible. Let's say I need a medication now. I'm going to go to the pharmacist, I'm going to show the pharmacist my ID card. The pharmacist is going to have access right away to the insurance carrier's discount. So if they tell me my drug's $100, unfortunately it's $100. If they tell me it's $10, my drug's $10, I pay it, it goes towards my deductible. So again, I pay my first $2,000 of medical and drug charges. Once my deductibles hit, look at my co-insurance line. It says I have 100% coverage for every major medical service. So if I hit my deductible of $2,000, and I go into an inpatient facility, I'm not paying anything at that point. So I'm not paying for my surgery. I've already hit my deductible. So once I hit $2,000, 100% co-insurance. Once I hit my deductible and I need to go into my doctor's office, I will pay the appropriate copay listed here, $30. If I need to go to a specialist, I'll pay $60. If I go into the emergency room, you see a $250 copay. If I go to the urgent care, I'll pay $75. In my drugs, I have the drug card there of $10 tier 1, $35 tier 2, $60 tier 3, $250 tier 4. So I have the drug card here after deductible. I do have the mail order piece on this as well, so if you're taking a drug every day, sign up for the mail order program. It's going to save you money. Now, remember, if you're on Plan 2, you have the ability to set up a health savings account. What is a health savings account? It is literally a bank account that you can put money away tax-free to pay for qualified medical expenses. So in 2020, if I'm on the plan as a single person, I can put away $3,550 tax-free into my health savings account. If I'm on the plan as employee spouse, employee child, or family, I can put away $7,100 tax-free into my health savings account. If you're over the age of 55, the government lets you even put in another $1,000 on top of that. Remember, if you're on the HSA plan, that money also rolls over every single year. So let's just say I'm a single employee on this plan. I put away $3,550 tax-free to pay for my medical expenses, and I don't have one claim in 2020. What happens? That money rolls over to 2021, and I can put in another $3,550 next year, or whatever they index it up to. So now I have over $7,000 sitting in my account to pay for medical expenses. What happens if you were to leave here? That money goes with you. It's your money. So with this health savings account plan, you do not lose those dollars. It's always going with you. It's a good tool to kind of put money away tax-free and then pay for medical expenses. The other really nice thing about the HSA plan is you can use those dollars to pay for goods and services that our medical plan doesn't cover. So I can use HSA dollars to pay for my glasses, my contacts, braces for my kids, any out-of-pocket I may have on dental. So it's a very good tool from that standpoint. So, any questions on the HSA plan? Everyone okay?
Yes, just a quick clarification. So if I'm enrolling as a family, but my husband is on his own plan, I can still put up to 7,100 in.
Yeah, because you'd have the kids on there.
Because I have the kids, right?
So you could do 7,100. Yes. Any other questions? All right, so these are our three medical plans, exactly the same as they've been the last few years here. Let's move over to page 5. We talked about you have to have your physical done by April 30th. The first two paragraphs talk about that. There is preventative care exam instructions. So Matt, read through this. This gives you an idea of what you say to the doctor, you know, when you're scheduling your exam, so you get it for free, so that's in there for you. So preventative care instructions are in there. Let's go to page 6. So remember, we mentioned at the beginning, dental's moving over to Lincoln Financial January 1. It's going to be the exact same benefits you had with United Healthcare. So nothing's changing, just the insurance carrier that administers it. Let's run through it real quick. Preventative care. Dental's really broken into preventative care, basic, major. Our preventative care, it's getting those teeth cleaned. Those are going to be covered at 100%. You know, those checkups we're supposed to be going in for every 6 months. Preventative care covered at 100%. We then have another service, basic care. Most common basic care is fillings. So fillings are going to be covered at an 80-20 split after a $50 deductible. So let's just take an example. I get a filling done, it's $150. My deductible's $50. I pay that $50 first, leaves us with $100. Lincoln's going to pay 80% of that, or $80. I'm responsible for the remaining 20%, or $20 in that example. And then we have major services, crowns, bridges, root canals. That's going to be done at a 50-50 split. If we go back up top at our annual maximum benefit, Lincoln's going to pay out $1,250 per person on the plan. So Lincoln will pay out $1,250 per person on the plan. Finally, there is an ortho benefit or an orthodontia benefit. This is just for kids up to the age of 19. They'll pay 50% of the cost, up to $1,000. The ortho benefit is a lifetime benefit. It's not an annual benefit. So once you've exhausted $1,000, you know, it doesn't reset every single year. And that is per kid on the plan, though. Each kid would get $1,000.
But because we're changing companies, though, does that mean we get another 1,000?
Well,
does that make sense what I'm saying?
Yes, I know, and it's a good question. I would tell you technically no, but you may be able to get away with it. Yeah, they may, but they might not catch it. But technically, they're supposed to look and kind of see if you used it with United Healthcare per se, but you might be able to get away with it from that standpoint. So here are the new deductions for Lincoln listed down below. All right, let's get to the next page, page 7 for vision.
Can I ask another question about that? Are we getting a new card then?
You will
For
get a new
dental?
card,
Okay,
yes.
and when you say nothing's changed, we need to make sure our current providers that were in network, we need to make sure they still are?
That's a good point, yeah, that could, now, benefits haven't changed, but yes, different people's, you could have some providers that weren't in network that now are in network, maybe your provider was in network, now they're out of network. So yes, anytime there is a carrier change, that could occur from that standpoint. Lincoln is gonna have a more robust network than United Healthcare, but yeah, obviously people's doctors, or excuse me, dentists could change from that standpoint.
So you need if you're just carrying the vision and dental, do you still need the physical if you're just carrying vision and dental?
You do not.
And then if your husband has vision, can they bill first and then can you use the vision, your insurance then?
Well,
In the old days, they used to be able to do that. If say both people carried, both vision,
Right.
whoever was the primary carrier, they would pay first and then the secondary would pay second then.
yeah, I can check. Do you know on that? I'm gonna bet on this, probably not, but go ahead.
I would say it's typically not cost effective in this day and age to do that, to have dual coverage, but we can double check.
Could you double check that?
Absolutely.
Okay.
And the only, and I think so, when we run through these benefits, you see what these co-pays are. So let's go through the vision. So I can get an eye exam done once every 12 months, and it's gonna be a $10 copay to get my exam done. Let's say my eyes have changed and I need a new lens. So I go ahead and get a new lens. I can get a new lens once every 12 months, and it's gonna be a $25 copay as well. If I wanna get frames, I can get new frames once every 24 months. They're gonna allocate me $130 towards my frames, and then I pay the difference in cost from that standpoint. If I wanna get contact lenses instead of a hard lens, I can go ahead and get contact lenses. They allocate me $125, and then I pay the difference in cost. So remember, contact lens and a hard lens is an either-or type of benefit. I can't get them both done in the same year. So like I always give the example, I wear contacts and glasses. 1 year I might get contacts, the next year I might get a new hard lens. You see the new vision deductions listed down below. So questions on the vision? All right.
It's the same or they have it on
The vision's gone up. Vision and dental went up as well, a few dollars. Yeah.
I need to get into my
So let's talk about the basic life, the voluntary life, the short and long-term disability, because with the new website coming out, you guys all have an opportunity, in a sense, to re-enroll in these products with no medical questions asked, and I'll go through that in a second. The first thing, Dawson provides everyone in here with a very nice life insurance benefit. Everyone in here gets 1 times their salary, up to $100,000 in life insurance at no charge. So if you make $50,000 a year, Dawson is providing you with a $50,000 life insurance policy. So it's a great benefit that everyone has in here at no charge. Remember, we have had the voluntary life insurance benefit here for a number of years. And you could sign up for the voluntary life insurance during your new hire waiting period, and you could sign up for that with no medical questions asked. But if you didn't sign up for voluntary life and you wanted to sign up 6 months after the fact, you could still go ahead and do that. However, at that point, the insurance carrier says, look, we gave you this opportunity to sign up for life insurance during your new hire open enrollment period. You didn't do it. What's changed with your health? So if you came on and looked for life insurance after the fact, the insurance carrier would get into your medical history. They'd ask you medical questions. You'd have to complete an application. They could ask you to do a blood draw, that type of thing. Now by having this new system here, they're giving everyone an opportunity to re-enroll with no medical questions asked. So if you look here, you can buy up to $100,000 of life insurance in $20,000 increments with no medical questions asked. So it's going to be your opportunity to do that now. Your spouse, you can buy up to $30,000 of life insurance, no medical questions asked. And for those of you who have kids, if you want to have $10,000 of life insurance on your kid, you can do that as well. So make sense on the voluntary life. Let's move over to page 9. It just has the bi-weekly deductions, but when we get into this website, when you log on to this website, the website's going to be tailor-made to your exact age and salary, so you're going to see your exact benefits in there when you log on to the website. We go to page 10. Short-term disability is voluntary as well. You can buy short-term disability, and how does that work? You have to be disabled for 14 days, and that can be due to accident or illness. So I'm disabled 14 days. On that 15th day, I would start receiving a disability benefit if I'm out. I can get 60% of my weekly salary up to $1,000 a week. So 60% of the weekly salary up to $1,000. This benefit lasts 11 weeks. This is also going to give everyone in here an opportunity to re-enroll in short-term disability if they would like to. So over the years, we've had a number of people after the fact want to sign up for disability insurance and get denied due to medical conditions. Now is an opportunity for everyone, if you want to, you're going to have the ability to sign up for short-term disability with no medical questions asked through the enrollment system. If you come to Sean in 6 months and say, I want to sign up for short-term disability, can I do it now? You can go ahead and do it in 6 months. However, at that point, they're going to get into your medical history. So here's our opportunity with no questions asked. Let's go to page 11, long-term disability. In my mind, this is your most important benefit other than your medical insurance, is our long-term disability. Long-term disability is going to cover everyone to their Social Security normal retirement age. So you could have this benefit to age 65, 66, 67, depending on when you're due to retire. Long-term disability is going to pay you 60% of your salary up to $5,000 a month. So I kind of look at it, not to sound like an insurance guy too much, but we insure our home, we insure our auto. Most of you in here are insuring your medical insurance, but are you insuring your lifestyle? And this insures your lifestyle. So if you were to go down and you could never work again for whatever reason, you're going to get 60% of your salary up to $5,000 a month. So it can help pay medical bills, help pay the mortgage, help pay expenses for the kids. It's a great benefit that Dawson's offering you. Because you pay for it, you also get the benefit tax-free. So you will not be taxed on this benefit as well. Very nice benefit from that standpoint. You have to be disabled 90 days on the long-term disability. So once you're disabled 90 days, long-term disability kicks in and you would get your monthly benefit. Again, this is our opportunity to enroll in long-term disability with no medical questions asked. Makes sense to everyone.
Yes, except what is the limitations? What does that mean?
Where are you looking?
Benefit limitations, mental illness, 24 months.
Oh.
Abuse, 24
Yeah, so that's just saying if you were, let's say you went out on disability due to mental health or a substance abuse issue, they'll pay you a disability benefit for 2 years in that scenario. Yeah. And that's pretty common with all the carriers on those disabilities. Next, we have the flexible spending account. Angie's going to go more through this on the website here. But if you're on Plan 1, Plan 3, you do have the opportunity to sign up for the flexible spending account. This is giving you the ability to put money away tax-free to pay for qualified medical expenses. The big difference between the flexible spending account and the HSA is the flexible spending account's a lose it or use it type of deal. You have to make your election during this open enrollment. You're more or less tied into that election. So if I decide to set aside $2,000 and I don't spend that $2,000, the FSA will let me roll over $500, but I'm going to lose the remaining $1,500. That's just just a weird IRS rule. It's not a Dawson rule or our rule, it's an IRS rule. Angie will go through some of that with you on the website.
So who gets the money that's not used?
Well, who gets the money, and this will get a little, the employer gets the money, but in the same token here, if you sign up for an FSA plan on January, let's say on January 1, and you set aside $2,000, and on January 2nd, you have a $2,000 claim, you have access to your entire $2,000. And then if you quit on January 3rd, your employer can't come back to you on that money as well. So it's uncanny how much it almost equals out. You know, some years the employer might be ahead on the FSA, some years they've paid out more than they've collected. And yeah, it's just a goofy IRS rule from that standpoint. Any other questions on that? All right, I'm going to come back to this in a second, but first I'm going to talk about, in this packet here, everyone has this packet. I do want to point out a very nice tool that you guys have that saves the plan money here. You guys have Teledoc. So Teledoc is having the ability to talk to a doctor, you know, via FaceTime, 24 hours a day, 7 days a week. So Jeff mentioned at the beginning, oh, we're getting charges for emergency room services. You know, the idea is, you know, for those of you who have kids in here, let's just say, a kid's sick on the weekend, you know it's not a true emergency room situation, but you feel like you have no other option. You take your kid to the emergency room. That's going to cost you money. That's going to cost the plan money. You do have the ability to dial up a doctor here. So talk to that doctor 24 hours a day, 7 days a week. If you're on the PPO plan, so plan 1 or plan 3, there is no charge for you to use this service. So there's no charge for you to do that. If you're on the HSA, it's roughly $49 per visit or per call on the HSA plan to do that. The doctors can write prescriptions for you as well, so they can write scripts. Now, these are, you know, Z-Pack type of prescriptions, that type of deal, but they help with the common cold, the flu. You do have it available to you. So we wanted to point that out on how you go about doing that. Teledoc.com or the 1-800 number here. Download the app, and you guys can all use that.
Where's that located in the country, the Teledoc?
I am not sure on where they're exact. They do have, well, what it is they get doctors in an area. I don't know where they're
I used to
headquartered.
do it as a nurse all the time, so I was just kind of curious where they're located.
Yeah, so probably same type of deal. They'll go into a certain area, sign up doctors to work the hotline. Also in this folder, you know, there's just some frequently asked questions. Talks about logging on to their website. So hopefully everyone's done that. Set up a username, password. That information is in there. Finally, I'm going to turn this over to Angie, and she is going to run through the new online enrollment portal. Maybe some of you have already gone on there because I think everyone got an email Friday morning on this. So she's going to run through the system. Thanks.
Good afternoon. Let me get logged in here. How many of you have completed this already? Anyone? Okay. All right, so you all should have received an email with from Ease with your login information. You will, and the link to go to decapua.ease.com. Once you're there, a page populates where you have to read and agree with their disclosures. So you'll agree with the disclosures, and then it sends you to your open enrollment. You'll start your enrollment. And then we have an overview explaining that this is specifically for open enrollment. Once open enrollment closes, which is going to be at midnight on Monday, December 16th, you have until Monday, December 16th at midnight to make your open enrollment elections. If you, once you, and it's going to close, so if you try to log in on the 17th, you're not going to be able to get in to make your elections. However, once open enrollment closes, you will be able to log in to view your information, update your address if you need to do so, add a dependent. Let's say you've had a baby, you can enroll your baby at that time. Any qualifying events, and then new hires will obviously be able to go in and make elections on the site. But you, however, for open enrollment, must have this completed by midnight next Monday, the 16th. Questions on that? All right. Next we get to your personal information, which the majority of it should already be populated for you. They did require or ask that they require your work email address, which you very well may need to input. It might be listed under your personal email address. You need to re-enter it under work email. Anything with an asterisk is required information. If you hit continue and you have not input the information in a required field, it will not let you go forward. Next we have dependents. And this test employee does have a spouse, but let's say they want to add and I input this information. Your dependent's information is not going to be already input for you. You are going to need to put your spouse and your children information in the website. But it's very easy to do. You would click add. Then you would enter their first name. I'm not going to be able to type since I have an audience. Why they have ex-spouse on here, I'm not quite sure. This is my child. Wouldn't let me go forward because I did not list a date of birth. And now my child is listed there. Next we have the documents page. All of these documents you are going to be required to review. I have already reviewed 1 through 3, so you'll see there isn't a blue review box here. All of the others that I have not reviewed, I need to click review, and then it will let me move forward. I want to point out the document overview page. And these are PDFs, so you will have to open them separately. Well, this one is a Word document. So it explains the medical preventive care exam that you must get within 4 months of January 1st. Goes through that process, tells you what forms you need to download. We have the working spouse rule, because the spouse verification form is available on this documents page. Then we have a description of the Employee Assistance Program, because we do have a brochure saved under documents as well for you to view. We do have the medical plan side-by-side comparison along with the rates, so that you can see if you do not get your physical, what your rates will increase to, or if you're a tobacco user and you get your physical, and you haven't turned in your paperwork, your tobacco non-use form by the end of April. It shows you what your rates will increase to. Oh, good Lord. get kicked out or something like that again, I don't have to go all the way through all the pages. I can go to the page that I was currently on. So this is where you're going to go to download your preventive care, the provider form that needs to be signed, the tobacco non-use statement you're going to download from here, and your spouse verification form if you are going to enroll a spouse. Yes, Sean?
I was helping somebody today and they didn't have the preventive care form uploaded to their,
I'm just
There's
seeing
that.
that it's not, there it is on, okay. If it
Yeah.
wasn't,
no, right in there,
Right, it only had like the,
first three.
yeah, the first three, and then it
But
didn't
number
have
two
any
wasn't
other
there
ones.
okay,
And then somebody, I think somebody from BMW, he was also trying to look for it, so he's asking
Okay.
where it was, and so Sean and I were looking, and so,
I will contact GIS on that, and that's what I was telling you. The 2 tests that they sent to me this afternoon did not have all the documents, so I'm guessing they're saying the same thing. I will contact GIS and then I'll let Sean know
okay.
once those have been loaded. All right, so I'm going to click continue. This will let me carry on even though, or go forward even though I haven't reviewed all of those documents. It's once you try to sign your forms and you haven't reviewed all of the documents, it will force you to go back to review. So now I'm on my medical plan election page. And I'm going to enroll John Smith, the employee. We're going to waive the spouse because the spouse has coverage through her own group plan. But I'm going to go ahead and enroll the child, John Smith, that we just entered. And you will see it has your biweekly payroll deductions listed next to each plan. You'll see the summary of benefits and coverage, or the SBCs for each plan. One thing to note on the SBCs, we do not, UMR has not released the updated 2020 SBCs, so you'll note the coverage period dates are not current. We will upload those as soon as we have them. So here's the SBC. If I want a little more information on the which medical plan I want to choose, we have a direct link to UMR's website for you to check for providers. Under the HSA plan, we have a simplifying HSA brochure that describes exactly what an HSA is, what can I contribute for 2020 at the bottom of the page. We have claims examples, what you can expect to pay under each claims example. I think you've all seen these before. Then the very last 2 pages are examples of eligible medical expenses and ineligible medical expenses for the HSA. And these would also apply to FSA. These are the types of services for which you can use your FSA funds and your HSA funds. I am going to elect, or have already selected, the HSA plan. So I'm going to continue to the next page. Because I've selected the HSA plan, it's taking me to this health savings account plan page. This is where I can choose whether or not I want Dawson to payroll deduct a specified amount each pay period to be contributed to my HSA bank account that I already have set up. I'm going to elect to have Dawson on an annual basis deduct $1,000 to contribute to my HSA account. When I scroll down, it's going to show me what that would be per pay. So it would be $38.46 per pay that will be deducted and contributed to my bank account. If you are having Dawson payroll deduct to contribute to your bank account, you do have to complete this 2020 HSA direct deposit form and turn this into Sean. This is where you will give him your banking information. if you already have this agreement with Sean or with Dawson, Sean, you might not necessarily need their banking information, but you do need them to sign this form with their election, correct?
Yes.
All right, I'm going to continue. Next we go to the FSA. Because I elected the HSA plan, it's not, the next page would normally, if I chose Plan 1 or Plan 3, the two PPO plans, the next page would be the FSA Health benefit election page. But because I chose the HSA plan, it's not going to allow me to elect the FSA Health plan because you can't have both. But it will allow me to elect whether or not I want to participate in the FSA Dependent Care Plan. To do that,
Is there a minimum amount you have to put in?
for the,
FSA?
you can put in it, no, there's no minimum.
Okay.
The max you can put in is, for the health, is $2,750 for 2020. For the dependent care, it's $5,000. Let's just say we're going to enroll in this. I'm going to choose the full 5,000. So $192.31 will be deducted per pay, and as that accumulates, then I can file claims to reimburse myself for my dependent care. Next, we have the dental plan, and as you can see on the right-hand side of the page, all of my elections are adding up so that I can see what my total biweekly deductions are going to be. I'm just going to enroll myself in dental. I'm going to waive for the child that I just entered. I'm going to be required to enter a reason why I'm waiving for my child. And I'm just going to say cost. And continue. Next we have vision. I'm going to go ahead and enroll my child. So there's my employee child payroll deduction. One thing I didn't point out on the dental page, on both the dental and vision pages, there are links to the provider network, so you can search for in-network providers. I don't think we mentioned when we were going through the vision plan earlier, your vision network is not changing. Will still be Spectera. It was Spectera with United Healthcare, it's going to be Spectera with Lincoln. But the dental network is changing. And we have benefit summaries under the dental and vision pages. Next you have life, AD&D. This is the basic life plan that's given to you at no cost. And because your salary was already input into the system, it's going to show you this employee, their annual salary is $47,000, so there's the benefit amount. It's not going to give you the option to change that. And because this is 100% employer paid, you'll see there's no cost. Continue on to voluntary life. So the benefit amounts are already loaded into the system, so you can select any of these benefit amounts, and then for your spouse as well. Since I added my child, I am going to select coverage for my child. There's my biweekly payroll deduction.
Are we still using our medical benefit card then for vision benefits?
No,
We'll
you
get okay.
will get a
Even
new
though
card.
it's care of it, we'll get a good
Correct.
card now. Okay.
That's correct. So as Chris mentioned, now is the time to, if you want to enroll in voluntary life and short and long-term disability. If you haven't done so previously, now is the time to do it with no medical questions asked. Your benefit amount, your coverage amount is going to be pre-populated based on your salary that was loaded into the system. And then it will automatically calculate what your payroll deduction will be. You have your long-term, same deal. Oops. Then you will be required to enter beneficiaries. For if you enroll in the health savings account, you will have to list beneficiaries for the health savings account, for your basic life policy, and then if you elect a voluntary life policy, you'll have to list beneficiaries for that as well. Then the next page is previous and current coverage. You do not need to list your prior coverage. Yes?
Just a quick question about the beneficiary. I missed that part. So, I just want to make sure I understand it. So it'll first go to my husband, but then how does it still go to him first if I die and then he's alive and my kids are still alive? Because then I'd want it, if both of us go, then I'd want the kids, of course, to be divided up equally. But how does that work on here?
Then you would have
Because I want him
the
to be 100%.
secondary.
Oh, that's what I didn't see. Okay.
Well, actually, rather than contingent,
You'd have to go in and add a beneficiary, I think, and move them over to the secondary. So you put 100% as the primary for your husband.
Right.
And then when you add a beneficiary, let's see if the system could do it. Then you would have your kids as secondary. So if you have 2 kids, then maybe oldest gets 50%, youngest gets 50% as well, or however you wanted to divvy that up.
Okay, so.
so generally, let's see if we can, because normally it would say, and this is something that we did not catch on this site, unfortunately, it would say contingent beneficiaries. So under primary, let's say we want 50 for Susie. All right, then your secondary would be your contingent. So primary, we have Susie getting 50%, John getting 50%. Now
So it will know automatically to go to my husband first, but then if both of us die, it will somehow know to go to all the kids second.
it will be, once you'll file a claim, and it will all be spelled out, for a claim will be filed, and it will all be spelled out on the claim form. I'm going to get a better understanding of how it should be listed in here, and again, I will email that to Sean.
Okay, so you're saying the paper claim form will override this if this doesn't work out right?
Correct, but as long as you have them listed as secondary,
Okay.
then they will know that in the event that your husband is no longer living, it would go to the secondary or contingent beneficiaries.
That's if I die first and then he dies second, and then it go, okay.
Correct.
Just don't die first. Okay.
So ultimately, like on these group life policies, and I think this is a good thing on why we're doing the website, because it's an employer-based product, if you were to pass away, they're always coming to Sean. So Lincoln would come to Sean and go, who does John Doe have listed as their beneficiary? And he's gonna look in the files and say, it is, whoever. And that's who yeah, and that's who they're gonna end up paying out on these group products. So in a sense, this is just a data feed to grab to his records on that. So it's a good idea everyone updates. That's why, like, if you haven't done this in a number of years, it's a good opportunity to do it, because maybe you are divorced from a spouse that had previously been a beneficiary, maybe a spouse had passed away, whatever the case may be, maybe it's old girlfriend or boyfriend, but it's an opportunity to do it. But we'll make sure on the secondary, that is, like in your case, you could list your kids if that's who you wanted to list.
They're listed as one, you know, as long as it totals, you know, equal parts or however you want, as long as it totals 100%.
Okay.
That would be under secondary. Any other questions before we move on? So again, previous and current coverage, you do not need to list your previous coverage. If you or a family member has dual coverage, so maybe your spouse, you're enrolling your spouse, but they also, well, that can't happen, a child, and they also have coverage under your spouse, then you want to list the child's other coverage on this page. That way, UMR can coordinate benefits. They know there's other coverage so that they can coordinate benefits to see who's going to pay first, who's going to pay secondary, that sort of information. Then we have a summary of my elections. If you've changed your mind as you're going through this and you want to click edit, you may do so. I don't wish to participate. I don't want payroll deductions taken and added and contributed to my bank account. Unfortunately, when you edit, it takes you to the next page, so I don't want to go all the way through those benefits again, so I'm going to go back to my summary page. Again, if you go through this whole thing prior to midnight on the 16th, you've decided you want to change an election, you can go in and do so. Then it tells me I have missing information because I didn't go in and review those documents. It's going to force me to go back and read all of these documents, which I'm not going to do now. But then once I would do that, I would go back to sign forms and go through the process of electronically signing. So it's very simple. In your benefit guide, the next to the last page, there is a telephone number for GIS benefits. That is who is administering this website. If you have issues logging in, you get stuck somewhere, you have questions, you can call that number and they will walk you through it or talk you through it. So any questions on this site? I'm going to go ahead and make sure that you all can view all of the documents. I will check in with GIS and then get back to Sean on that. And then I'll also confirm how to specifically add your secondary beneficiary information or your contingent beneficiary information. So, any questions? All right. Thank you very much.
Thanks, everyone.
Thanks, everybody.
Thank you.
Hi. I got a question.